Mark Hammer, Hammer Group Realtors EXP, and I'm here today with our mortgage specialist, Martine Perron, and we're going to talk about deferring your property tax and whether it's a good idea or not. And there's a lot of questions going on right now because there's been some changes. But before we get started, I just want to talk about the property tax deferring, and basically what it is. 5 years or older, you can opt to defer your property tax, and the cost of that would be prime minus 2. So prime right now is 4.45, so minus 2 would be 2.45, and it's simple interest. So what's the big change now, Martine?
Yeah, the big change that everybody's talking about is how the interest has increased. So now it's prime plus 2%, which means at today's rate it's 6.45. But the even bigger change is how the interest is calculated. The interest used to be simple interest, but now it's compounded interest. And the huge difference is simple interest is charged once a year, and it's just on the principal amount borrowed. Compound interest means that they calculate the interest on the principal plus the interest accumulated so far. So that interest will increase much faster, which is good when you have investment.
Well, yeah, compound interest just keeps adding up and adding up. It's the compound effect. Let's start off with an example.
For the example, we use municipal tax of $8,000 a year, and we're using the same amount for 10 years, 20 years, and 30 years, even though we know that municipal tax are subject to change and can increase. And we also use the same interest. We wanted to show you what deferring your tax used to cost versus now what is it going to cost. If someone was deferring their taxes at 2.45 simple interest for 10 years with a municipal tax of $8,000, it used to be almost $11,000 in interest for 10 years. But now, Mark, what will people pay if they defer the same amount of tax for 10 years at a compound interest of 6.45?
Well, yeah, it adds up. I mean, it's $35,000.
So it's a $25,000 difference for the same example.
Mm-hmm. And what makes it even more interesting is 20 years. 20 years compound interest at 6.45%, deferring $160,000, you're paying over $176,000.
So now your interest for deferring your property tax is higher than the property tax itself.
Yeah. And now after 20 years, you owe $336,000. I mean, that's significant.
And you even have clients that have been deferring their taxes for 30 years.
Yeah, it started out a long time ago. I know my parents started doing it at 55. And for them, it was a no-brainer. You're paying a couple percent, and it's simple interest, and you could just put your money into a savings plan, and you'll be making compound interest. Why would you not do it? But it's totally different now. If we look at the long term, 30 years, your tax deferred $240,000, but your interest, compound interest now, $516,000. And so now you owe $756,000 on your place. That could be a drop in the bucket, but if your property's really worth a lot of money, you're going to be paying a lot more than $8,000 a year in tax.
That's right. And the thing we got to remember is when you're starting to defer your tax, the city add a liens on your title. If you want to do something with the title, either to get a line of credit or reverse mortgage, you're not going to be able to do it without having to pay those taxes first.
That's right. The reason I'm doing this video with you is just because I'm getting emails. What do we do about this?
Yeah.
What's your recommendation?
Well, I do believe that people that are looking to start the program, if they're only 55 and they're still working, they should wait and just keep on paying those municipal tax and wait till they have a lower monthly income. But people that are very stretched and they need the break, they can start it now, but just to remember that it will cost if they're doing this for a very long time. They might want to look into downsizing instead and have a better cash flow.
Instead of doing it at 55, maybe doing it at 70 now. And only doing it for, say, 5 years, because it's that compound interest after 20 years is a lot of money. That's really all we have to say. If you are looking to downsize right now, give me a call. If you're looking to refinance right now, give Martine a call. Bye for now.
Thank you.